All right, my fellow traders. I just wanted to talk about what happened tonight. I breached my account, my prop firm account. Uh, so, the funny thing is, I didn't breach the original $10,000 challenge. I actually breached the money that I've made, which I guess I had a trailing loss, where depending on like when I keep winning trades, increasing the account, my actual max loss is trailed up. I didn't know I had that, and I breached it. As you can see, it says breached. When they chose to make my account breached, I was actually at 10,542 and 93 cents. If you look at where I was at one point in time, I was at $10,844.67. So I needed 156, maybe $55 more to win, which I thought that was possible, given the right market environment. And that's something I did want to talk about, is that from the very first challenge I ever took in to now, time, I'm gonna call it time in sales. Time when volume is up, there's people in the market, and spreads are low. That equals perfect market environment. And I'm still figuring that out, and like also figuring out which pairs to trade in certain markets. Now, I know any US pair will be volatile or have a movement in the New York session, but if I'm trading the Sydney and Asian session, I need to figure out which pairs are best traded during those sessions. Now, I know, say, I kind of figured, any pair with JPY in it should be good for Asian sessions. Just makes sense, right? So I chose to trade AUD JPY because that's Sydney and Japan, when people are, waking up on the other side of the earth. I kind of fell off of that, and they started trading heavily on USD JPY and figuring out the times that they're most volatile besides using the New York session. Because I like to put trades in at nighttime too. So that's one issue I'm having is, yes, I over trade when I start to occur losses, but I also don't know the best times for maybe the pair I'm trading, or just in general, like which time are the best. Now, I know London is the most volatile session of them all, and then comes New York, Sydney. People really don't consider a Sydney as a session, I guess because there's like literally no volatility at that time. And Asian session is kind of flat. But I do know that there are times you can trade those sessions. But I feel like finding the pairs that move, and you have to be okay with the spreads and the slippage. So that's one side of what I want to talk about tonight. And I'm kind of done with that. I also do want to kind of figure out these numbers so I can get better with understanding how to set up my strategy, like my win rate, my risk to reward. Because maybe, I'm not letting my trades breathe enough to actually make the trade go in my way. Because I do notice that too sometimes. I'm too early. And when I'm saying I'm too early, it's like, where I believe the entry point is, and my stop gets hit. It had to go a little bit lower. Now also maybe using, alright, if I'm trading on the day, like kind of make sure everything aligns up. Alright, well, if I see a entry point which I believe is good on the day, draw that out, probably make a box or something, and then find within that box maybe a 4-hour entry that I believe the market will go to, and then just keep going down till I enter my trade management time zone. Okay, well, I like this area. I'm gonna put my stop here, because if I lower it to a point, then I can make it into a day trade or a swing trade, because I have the best entry and I have the best stop loss, which I feel like my mentor kind of teaches us, is like with support and resistance zones. If because it's a zone, you want to kind of get here, but here it's not a lot of trade, like it's going to be hard for you to get executed at these zones. So like maybe here, but he's a day trader, I'm a swing trader, well, day trader too, but I feel like he does more swing trades than day trades. So it's something he teaches us, and I'm like, why can't I just apply that for the smaller entries? I get that sniper entry, which that kind of never really worked out for me, but maybe I just wasn't doing it right. And I'm like, oh well, yeah, outside of my entry, this is the best entry. So I feel like in this area, this is not a good entry, but I have to remember this is the entry I believe the daily is going to go and respect. Now, if it breaks that, then maybe thinking about, all right, this might not be a good, this might not be the entry point I was seeking, or maybe I'm wrong with direction. So that's, another thing I wanted to kind of touch on, is figuring out entry points and whatnot. And then I'm not really sure if I talked about it, but basically prop firms as a structure of failure. They structure their trade, like their challenges, for us to fail. And it's better to get the confidence that you know you can get it up to a certain level and trade your real funds. Because I got it up to 800. Like, not every, like, that's, it's easy but not easy. And you, like, it's easy because you have the confidence. It's not easy because you don't have the confidence. But also it's not easy because, like, if your account size doesn't match it. But I feel like if you think of in terms of what I got it up to, and that's all right. Put that percent, like, so if I got up to 8%, put that onto maybe $1,000 account size or $100 account size. It's possible. Now, is it possible to grow it, to flip it? No, if you're using proper risk management and you're not trying to flip an account. In that aspect, no, it's not realistic, and it's not easy. But if you have proper risk management, you have a realistic goal, then yes, it's possible. And I feel like 10% is possible because I was there. Now, doing trialing stops, kind of, no, like that's kind of, I do, like, if I'm risking to really grow their account, you gotta be able to risk. So it's like, all right, well, now I'm risking 10% or 1% of whatever I made. So if I had originally $1,000, I got up to 1,800. Now I'm risking 1,800, not $1,000 account. So whatever the percentage, like whatever the trade was for that $1,000. So let's say for that $1,000 account, I'm risking $10. All right, now I got up to 1,800. I'm risking $18 per trade, and basically doing that for a personal live account, which I think is more beneficial than doing a challenge, because I do feel like challenges are structured around us to foul the challenge and not to really pass. Because I feel like, yeah, since all the trades, all the challenges I took up, I lost all of them. But this is the one that I was most, I was really, I feel like my management was there on point. Now, could it have been better? Yeah, of course, could have been better, but it was there. And yeah, if I got up to that much, why can't I do that from my own account? And when I make more money, just fund my account. Like, I don't have to flip it. I just have to fund it. And when it grows, I can then, place bigger trades. So that's where my head is at right now. And then for the options, get really good with direction and do simulator with options, just to get the feel for theta, all the Greeks, and Also, if I do it, maybe trade spreads, so like uh, debit bull or bear spreads, and then probably go down to single leg option, because I think single leg options are most difficult to trade than the debit spreads, because they do protect you from theta loss if you're a swing trader. Now if you're a day trader, just pick days to trade when the contracts aren't expensive and there's actual move in the market, or just try to pick the best, because I feel like the most expensive trades are the trades that are good to buy, and then like the most cheaper trades are like, it's like the theta, delta, vega, like all those are not really stacked for you, but more against you. So trying to figure out how to recognize good contracts versus bad contract days. But as of right now, Forex is where I want to be at, even maybe moving towards futures. I want to trade a lot of different markets, and the future market, option market, and Forex market are what I'm most interested in. But before I move into any other markets, trade the Forex market, get good with direction. I think direction is the most important. Knowing direction, and then everything else follows. This is what I'm kind of realizing now. In a week or a couple of weeks from now, I could have a different opinion on it. But as of right now, my opinion is figure out how to be more correct on direction. And then if you want to trade options, kind of learn the Greeks. So like doesn't matter. I'll say what I'm going to be doing is using all time frames, finding an area where I believe is area for a area to be respected, and trade for my bias, and then just go down, like create an area and then go down time frame to find the best area for that to go to my side, if that makes sense. And I'm going to also show that in the video, maybe not tonight, maybe not tomorrow, but sometime, just to have a reference, because I am trying to place a lot of videos in here just for my own journaling, and to help, maybe this may help someone else become a better trader. Alright, so till next time, peace.